SF 530 Audit Sampling. Audit sampling is application of audit procedures to less than 100% of items within the population in such a way that all units have equal chance of selection. Characteristics of population: completeness, appropriateness, and reliability. Factors for extent of sampling: size of organization, extent of internal control, adequacy and reliability of books of accounts, tolerable range of error, and desired consequence. Advantage or importance: sample size does not increase with proportionate increase in population. More objective, thus more desirable. Estimate minimum sample size for specific risk and precision. Means of calculated and corresponding precision. Better description of entire mass of data, widely accepted as it is scientific without personal bias. Sampling process, sample design, sample size, sample selection method, audit procedure, nature and cause of deviation and misstatements, projected misstatements, evaluating the results of audit sample. Sample selection, random, simple random, stratified random, systematic or interval, monetary unit, haphazard, block, and cluster. Errors in sampling. Errors in sampling or sampling error is that conclusion based on sample won't be same if population is subjected to the same audit procedure. Controls are more effective than they are. Misstatement does not exist, but it does, and it affects the effectiveness and leads to inappropriate audit opinion. Or controls are less effective than they are. Misstatement does not exist, but in fact it doesn't, and affects the efficiency and leads to initial conclusion incorrect. Precaution for test taking: study of accounting system, study of internal control system, area not suitable for audit sampling, and proper planning of sampling method. Non-sampling risk is the risk that auditor has reached an erroneous conclusion for any reason not related to sampling risk. Example: inappropriate audit procedure, misinterpretation of audit evidence, and failure to recognize deviation. SF 550 Related Parties. What are related parties? If any party that has significant influence or control over the reporting party, or any party in which the reporting entity has significant control or influence, are the parties which are in common control with reporting entity because they have common controlling ownership, owners who are close family members, or common key managerial persons. Situations with higher risk of material misstatement: related party transaction not conducted under normal market price, related market related party transaction conducted to extensive and complex related party relationship and structure, and related party will not be identified and RPT will not be disclosed as they are in corporate information system. How to verify the existence? Confirmations via bank, legal and third party, minutes of board and general, returns of income tax, registers of director, investment and shareholders, and reports of internal auditor and tax auditor. Significant related party transaction. This is obtained audit evidence that transactions have been authorized and approved. Inspect the contract or agreement and evaluate whether the business rationale is to engage in FFR or MOA, terms or conditions with management's explanation, and transactions have been accounted as per applicable FRM. Subsequent events SA 560. Subsequent events that are the events that occur between the financial statements and date of audit report. The risk assessment procedures include: obtain SAE that the financial statements require adjustments. Auditor need not perform additional procedure where previously satisfactory conclusion has been obtained. Understand the procedure adopted by management to identify subsequent event. Conduct inquiry with management and TCWG whether any events have been occurred. Read minutes of meeting and inquire about matters discussed. And read the latest subsequent in-term financial statements. Events after balance sheet date, adjusting events and non-adjusting events. specific inquiries, events casting doubts on going concern, increase in capital, new borrowing entered into, development regarding risk areas and contingency, sale and acquisition of asset, recoverability of asset. 570. Going concern. Going concern intends to liquidate the entity or cease operation or has no alternative but to do so. It is not going concern, the entity will prepare financial statements on liquidation basis. Objective of auditor is to obtain SAE whether going concern assumption is appropriate and a material uncertainty exists relating to events or conditions which may cast significant doubt on entity's ability to continue as going concern. Absence of material uncertainty is not a guarantee of going concern. Responsibility. Remain alert throughout the audit and assess risk assessment procedure and related activities. Determine whether the management has performed preliminary assessment. If assessment is performed and the event is identified, plan to address them, and assessment is not performed, basis of use of going concern. Compulsory audit procedures. Request management to prepare the assessment, future plan, cash forecast, and additional fact or information. Optional procedures. Future action by third party and management, cash flow and other forecasts, subsequent events, and representations of third party. Implications for auditor's report. If going concern is inappropriate, adverse opinion if advise management to prepare financial statements on liquidation basis. Does this unqualified plus EOM does not inform members by public notice. Management unwilling to make or extend assessment, issue qualified or disclaimer of opinion. Going concern appropriate but material uncertainty doesn't exist, unqualified SS700, and ask auditor to disclose all the mitigating factors, and if it exists and audit disclosure is not given, SS700 basis for qualified opinion and state the material uncertainty exists, and if adequately disclosed, unqualified opinion and material uncertainty relating to going concern. SA 580 Return Representations. The objective of auditor is to obtain written representation from management and TCWG and to gather evidence supported by means of written representation and to respond appropriately if written representation is not being provided. If there is doubt on reliability of the written representation, the auditor must modify his opinion as per 705, and if written representation not provided, reevaluate the integrity of management and issue DOP as per 705.